one seems to be better, I guess I'll post out there for people who aren't here today. Not that either one will be very good, but of course, you know that. Anyway, so, and if I can't record the review session, I'll take a review session from an earlier semester and put it out. Okay? Sound good? That's all basically think about, right? Okay, anyway, we haven't covered hardly anything, and now we're going to do a quiz. This works extremely well, because what happens is you guys have read the chapters seriously, haven't you now? Right? I bet you. If you haven't, oh well, there's next semester. Right? Oh, no, I forgot. You get to drop one of these quizzes. You could drop the first one, you know, the easiest one. That'd be all right. If you want, don't get that strategy. Okay? If you haven't read the chapters yet, oh my gosh. How many of you have given me, how many days have we been doing this class? And we figured 15 hours a week maybe it'd be. How many people have given me, how long have we been? A week and whatever. Right? How many given me 15 to 20 hours so far? Oh, you nerds. Okay? Yeah, that's good. Good for you. Okay? If you haven't, you might start thinking about it. When's your class? Right. Yeah. How many of you, you saw my email suggesting you bring one of these? Oh, is there anybody that needs one of these? Right. Here, I was so proud of you because you've been studying and you even bothered to go out and look at the quiz. You know, I don't know, if somebody put out a sample quiz for me, I would certainly go find it and work it. If I was sitting in this room knowing what I know about survival now, and doing moderately well at things even though I'm not very intelligent, you know, stuff like that. Thank you, sir. Good to see you, sir. I think I would have gotten this quiz out and I would have worked it by now. How many people have gotten this quiz out and worked it by now? Anybody? Nobody has worked it by now? I'm running out. She's got one. She's got one. Oh, anybody who has one electronically is okay. You guys share one? You guys share one? I don't have one.
I can use mine.
You have your computer?
Yeah.
Or you can make it on her? Yeah, all you need to do is keep it off. Okay, good. I would have gotten this out and worked the thing. And then I would have come in here with some questions for Keith about how to do the ones I don't know how to do. And then I'd be done studying for the quiz. I would have also worked most of the homework problems. I wouldn't have done all of them. Have you been working the homework problems? Did you know some of them are exactly the same as the other ones? What if you can do it the first time you do it without looking at the book? Yeah. What if you have to go back and look in the book while you do it? You're not done. Right? What if you have to look at the answers while you're doing it? You're a crazy person. Don't look at the answers while you do it. Crying out loud, you think you know how to do everything, right? Imagine, you know, if you got to do an exam and they give you the answers, and all you got to do is write them down. You get it right, right? It's not knowing how to do anything. So what I would suggest to you guys is that you work a bunch of the problems, work as many as you need, right? If you've been working them, you're probably in good shape with this stuff. It's going to be easy. If you haven't, you're probably not, okay? And it's just going to snowball. It's just going to explode. And I know you guys, most of you are pretty new here, right? Freshmen. And you've never experienced anything like you're going to experience at Bellarmine. And all I can say is welcome to Bellarmine. Get with it. There's, you know, we do a summer scholarship class, which none of you took for, I don't know why, but I hope you got a notice about it. But we give away a free principal's class every summer. And not next summer for you guys, but for new freshmen, yes. So if you knew high school kids coming in, tell them to do it. Anyway, so I did a class with a small group of people, and they got used to this shit. So guess what? They're not spending time getting to know people and, you know, developing relationships and having a good time and joining clubs and everything. What do you suppose those folks are doing that are competing with you, that were here this summer and did 6 credits? They're studying their ass off. And they're going to nail their classes. Are you doing that? If not, they're going to blow you away. Out of your world, guys. That's it. If you go to work, for me, it's, well, I'd be much younger, right? For some 30-year-old person, maybe, right? And they're the manager or partner, right? And you're 2 new staff people. And she knows double what you do. And she works twice as hard as you. They're going to get her 20, 25% raise at the end of the year. And they're going to tell you to get your act together. Or depending on how bad it really is. They might tell you to leave. You bet it will. Okay? You might be having a lot more fun, though, doing drugs, drinking, running around with, beautiful people, stuff, right? Having a good time. You might just be sitting at your desk working her life away, wasting your time. You got a better plan than me. That's not your plan, but yeah. While you're doing it, you're going to be thinking, why am I doing this? God, everybody else is having fun. In fact, have you noticed that yet? How many of your friends have a quiz Friday? Does anybody know? Classmates, friends? How many of you have a quiz in any other class Friday? Do you really already? Who do you have?
Intro to public speaking with Elaine.
A quiz. Good. And public speaking. Who else?
I have one psych already.
One in psych already? Cool. Was it a reading quiz, though?
Yeah.
To prove you read it? It wasn't a real quiz.
I mean, it was hard.
Oh, this will be a real one. Is yours going to be a real one? Sounds like it. Yeah, good. Good. That's cool. Yeah, I think it's better because, when you go to work, I think it would be better if they gave you something really substantial to do the first day instead of pretending like it's going to be a whole bunch of fun and no work. Instead, it's going to be a whole bunch of work, which is a whole lot of fun. How many of you would like to have a career where every day you got to do something you don't know how to do? That's new. You get to do something new every day. Be around new people, do different things, new challenges. As soon as you master something, you start teaching other people who don't know how to do what you now know how to do that. You got the idea? And you just move on forward. And of course, you keep getting promotions and you keep getting raises. That's nice too. But also, I think the real fun is you get to do stuff you don't know how to do. By the way, is this a little stressful? Yeah. The only way I can stomach this job, because I'm covering the same material over and over and over, is that all you are new. And you don't know it yet, and I get to find a way, try to figure out a way to get you to learn it, right? It's all it's about. That's what it's about, okay? It's really fun. If I had to teach each of you as a group, right? If I had to teach you guys this stuff semester after semester after semester, and we did exactly the same thing, right? The same course every semester for the rest of our lives, I'd retire today. So think about what your career is going to be like. If you worked your ass off, and you really deliver in school, and then at work, you're going to have a blast. It's not about the money. The money is just an accident. I never asked for a raise in my life. I never asked for a promotion in my life. But I have an awful lot of people coming and asking me how to do things, We all get hired together and we're the same age. Pretty soon the three of them are asking me, what the hell's that about? Why would they be asking me? What I would do it. And I wasn't afraid to make a fool out of myself, making mistakes. Right? You didn't make a fool out of yourself. I did. Right? Okay, you didn't. Okay? Cool. Right? I make a fool out of myself for a living. So don't worry about making a mistake, and don't worry about throwing yourself out there. Put yourself out there. Right? Do it. After you've been working for me for 5 years, if you're still asking the same question, maybe we have a different issue. Right? But as long as it's a new question about something you don't know how to do, and you're learning, cool. That's fantastic. Right? We're making stuff happen. And by the way, after you've been working for 5 years, you'll know more than I do anyway, so you wouldn't be asking me. All right, so I think what we ought to do maybe is talk about the accounting model real quick. Synonym for left. Debit. Come on, you guys. Debit and left mean the same thing. Let's go. You're in second grade again. Okay? You're going to wish you were as we move along. Okay, anyway. Synonym for right. Let's make sure the right side and the left side equal each other. You like that idea? Memorize one of those, not both. Okay, there are 5 kinds of accounts. Well, this is the first question, by the way. Okay? There are 5 kinds of accounts. That's going to be the accounting equation. I want the full accounting equation. Okay? 3 of them go on one financial statement. What's it called? Balance sheet. What go on the balance sheet? All your stuff, your assets, your possessions, right? Which equals your liabilities, which is everything you owe everybody, and stockholders' equity or contributing, or capital rather, in total, contributed and retained. Okay, yeah. Okay, so equity. Good, good. Okay, that's a representation of your wealth, right? Is it true the difference between your assets and your liabilities is how much you're worth? Duh, right? That's your equity, right? Okay, and then there's another financial statement named, why am I writing down math? Okay. On an income statement, what do we have? Revenues, which is what? All your sales? Selling goods or services to people? And your what? Expenses, which are all the costs associated with earning those revenues that you incurred to earn those revenues. And the difference is not an account, is a what?
Net income.
Net income, which is either that or net loss, right? Net income would be what? Revenues exceed expenses. Net loss would be what, guys? You had a net loss. It'd be the expenses exceed the revenues. Okay? Let's throw debits and credits in here. This should just be automatic to you. Oh, by the way, what I would suggest to you, guys still have it over there on the board? I'd suggest taking a note card, small piece of paper or something, or on your phone, I don't care. Put that on, right? And have it sit right in front of you while you do all your homework and so on, okay? You cannot bring that in when you come in to do the quiz. What I want you to do when you're going to do the quiz is, as I'm handing out the quiz, write that down. So you have it right in front of you. So you don't sit there and have your wheels spin trying to remember how the model works, okay? All right? You know, you don't have your name written down so you can remember your name, right? Because you know it so well. My granddaughters are so cute. One of them is named Madison. They're twins. That's 5. And so, of course, they just learned how to write their name, right? Fairly recently. And so we're very proud of them with that. It's good. It's also safer. But anyway, Madison is one of them. And I like to call her Madahan. She's real inside of her personality. It really pisses her off. So every time I call her, so that's why I do it. So I call her Madahan, and she's, no, Papa, I'm Madison, and then she spells it every single time, so I get her to spell her name. The other one's name is Reese. Reese Ann, I think. Yeah. Anyway, she goes by Reese Peasy. Does this give you, that's, and she can even spell that, by the way. Yeah. Hopefully not at school. They're in the same class together in kindergarten. And so she knows what her name really is, but she likes to go by Reese Peasy. Does it give you some real insight into the difference in the personalities already? Isn't that cool at 5? They look a lot like each other. They have legs about that big around, I swear. They're tiny. Yeah. Oh, well, I don't know what happened to me. Yeah, anyway. So, hope they stay, well, not asking. Hope they stay thin. Okay, anyway. So, how do these things work? Let's do debits and credits here, you guys. Should be just automatic to you, but it's not yet, is it? Okay? So, what side are our assets on? Synonym for left. How are you going to increase them? Debit, that's why. How are you going to reduce them? Credit. Yeah, absolutely. Liabilities and equity, they're both on the right-hand side. How are you going to increase both of them? With a credit, because credit means what? Right. Get a normal balance credit. How do you reduce them? Debit. There's nothing to do this, okay? You know what? I haven't done any of the problems on this quiz. I haven't done any of the homework problems with you. Why am I doing this stuff over and over and over? Because if you know this, you can do the other ones with common sense. I'm not kidding. All you do is you look at the transaction and say, what happened? What are the only things there are? Assets, liabilities, equity, revenue, expense. If you know that, you got it made. Don't memorize anything. Read it and figure it out. Got it? So who cares what Keith asks? It doesn't make any difference. If you understand the business transaction, you can record it. It's always exchanging assets, liabilities, equity, revenue, expense. Always. Okay? All right. So then, revenues and expenses are really not part of the main accounting equation. They're not part of the balance sheet. But they're what? A subset of what? Temporary what? Equity accounts. Yeah. So as I earn revenue, what happens? I'm selling stuff. What's my sales? As I earn revenues, what happens to my wealth? Going up. So what does revenue have to be? A credit, because equities increase with the credit. Revenues, of course, have to be increased with the credit. How about if you put too much in there? What should you do? Decrease it with a what? Debit. Because we don't remember what to add and subtract anymore. It's always the difference between debits and credits. You don't have to bother with remembering what to add and subtract. It's a really nice thing about accounting. Okay? It's always the difference between debits and credits. Always. Okay? Or in this case, it's the debits equal to credits, right? It's always debits and credits. Okay? By the way, to the extent I have revenues, what just happened to my equity? Income went up, equity went up. If you're doing a balance sheet for me on the quiz, what do you want to do? Take the net income for the current year and add it to what? Retained earnings, because retained earnings goes up by the amount of your net income, doesn't it? What do you have in net loss? What is your wealth if you have a net loss? Decreases. Okay, a net loss would of course decrease it, right? Okay, and the debits and credits are going to work for that. Expenses, they have to be the opposite of revenues, right? So what are they? Debits. Increase with debits. Put too much in, you'd reduce it with a credit, wouldn't you? Okay, that's correcting an error. Okay? All right, so tell me this. What do expenses do to your wealth? As I'm increasing the expenses with debits, what's happening in my retained earnings, my equity? It's going down. So it flips your brain inside out, doesn't it? But that's what's happening. Okay? Makes sense. So is net income a debit or credit? It's not an account. It's just the difference between the revenues and expenses. What do you think? It's a credit because the revenues exceed the expenses, so the credits exceed the debits. Does credit mean good or bad or plus or minus? No, what does it mean? Right. Debit means less. So be careful. A lot of people say, oh no, credit's got to be bad. Or credit's got to be negative. Yeah, credits are negative on assets. Credits are positive on liabilities and equity. Credits are negative on expenses and credits are positive on revenues. Don't go there, you'll go nuts. Okay? It's true, but don't learn it that way because you have to memorize everything. And you'll screw up. Right? Another 50-50 shot. Guess wrong. Got it. All you have to remember is left. Debit means left. Assets on the left. Everything else is common sense. Right? You'll get so this is ingrained in your soul. I've known this. I knew this when I was born, sure. Right? Absolutely. I must have. I don't remember learning this. Okay. Anyway, net loss, debit or credit? Yeah, what do you think? Expenses exceed revenues. That's what a loss is, of course, right? Your costs exceed your sales, right? What do you think? It'd be a debit. Okay, that if you had a net debit there, it's a debit. Okay, good. Under equity, there are two types of equity: contributed capital and retained. By the way, there are thousands of accounts that are assets, right? You can track thousands of different assets. It's okay. Same with liabilities. Only probably a few equity accounts. As many revenues as you want in a company. How many different ways do you earn revenue? Huh? What do you sell? Goods and services. Okay, maybe rental income too, and maybe interest income too. Huh? All kinds of stuff. Maybe dividend income when other companies pay you dividends. All kinds of stuff, but they're all revenues. All of them are increased with what? They're revenue. I told you something's a revenue. They increase with a credit, right? How would you get less revenue? Debit. Yeah, that's it. It's how it's going to work. Okay, anyway, same with expenses, thousands and thousands of expenses. No big deal. How do you increase all of them? With a debit, of course. Okay, anyway. All right, so what do we have? What are the two types of capital you might have, equity you might have? Contributed capital, and what else? Retained earnings. And in retained earnings, what happens in retained earnings, everybody? That's the earnings you kept. Where did the earnings come from? It's your net incomes, of course. Net income comes into retained earnings, right? So whatever you start with in retained earnings at the beginning of the year. Oh, by the way, when you start a new company, what's the balance in every single account? Oh, you've done no transactions. You've exchanged nothing. It's zero. All the assets are zero if you never bought one, right, or contributed one. All the liabilities are zero if you never borrowed any money. All the equity is zero if you have no equity, right? You didn't start. There are no revenues. You haven't earned any revenues. There's no expenses. You incurred no costs. Everything starts at zero. Is your general ledger in balance? Do the debits equal the credits? Does zero equal zero? Yes. So if you make sure every time you record a transaction that the debits equal the credits, will you stay in balance? Yeah, we can program the computers to do that. The bad thing is if there's a power failure and it's in the middle of posting, everything's all out of balance. It's a mess. And then you have to go in and fix that. Okay, but anyway, the idea is you stay in balance. Does that mean the balance sheet income statement is going to be correct? No. Maybe you have the wrong debit and the wrong credit. You can make all kinds of mistakes, and your balance sheet can be imbalanced, and you have all kinds of mistakes. Your income statement can be wrong, your balance sheet can be wrong, you're still in balance, huh? But do you know something's wrong if you're not in balance? Oh, yeah. That is for sure something wrong, right? You didn't make sure your debits equal your credit, so you be kind of careful with that. And by the way, it looks like we're teaching you guys how to be bookkeepers here. People say, oh, accounting is so boring. Well, yeah, it wouldn't be if that's what you did for a living. I have never recorded journal entries in my life in the general ledger. And I was in the last class, I estimated it's like 42 years, 43 maybe, of being an accountant, and I've never recorded a journal entry in the general ledger. Why not? I cost too much. Nowadays, a computer does it for us. In the old days, and still in real small companies, a bookkeeper will do it. A bookkeeper makes $20, $25, maybe $30,000 a year. I'm not doing any journal entries. Plus, I don't want to. It's boring. And it's sort of back to the thing of, the more the job pays, lots of times the more fun it is. Not always, but lots of times, right? The more fun it is, right? The more challenging it is, it's more fun, right? But anyway, computers do all this. So why am I having you do this? If you don't know what the computer does, you're really in trouble. What you're going to get is a sheet of paper called a balance sheet, another sheet of paper called an income statement, and you're going to have them sitting there in front of you, and there are going to be millions of transactions added up in those. All these debits and credits, debits and credits. And then your boss is going to say, do you think that's correct or not? All those numbers that are on those balance sheet and income statement, you look at simple ones so far, right? And they don't really get much more complex. We always try to keep them on one page, maybe a balance sheet on 2 pages. You know, have the assets on 1 page, liabilities and equity on another page. Income statement always 1 page. Cash flow statement always 1 page. They don't want more than that. It's ridiculous. They'll summarize things and group them and stuff. Right? So you're going to read it. So somebody says, so do you think that's right? Is that the right net income? Man, it would have been better if you actually did all the journal entries, huh? Because then you know it was the right net income. But you don't get that luxury. You just get to look at it and determine whether or not you think it's right. Got the idea? Do you think it's valuable to be able to tell whether or not it's right? And maybe what's wrong with it, and how to fix it, and all that kind of thing? Yeah, that's where we're going to go, okay? So this is the basics of how to understand it. It's kind of like, do you think you could write the great American novel if you could not spell? I don't know, we have spell check. No, we know how spell check works, right? You use the wrong word and it thinks it's the right word. Doesn't really check it, not much of anything. Well, that was sort of it. So, I love spell check, by the way, but it's dangerous, isn't it? How many ways are there of spelling there? 3. Does the computer know whether or not you use the right one?
No.
No. It really should. Right? Come on, they need to develop better, right? They should look at the sentence and determine which one you meant to use. Don't you think? It's annoying, okay? You guys can get rich doing that, probably. I bet they're trying to. They're working. There are grammar ones, but they're worthless, I think. I write something exactly the way I want it, and they tell me I'm grammatically incorrect, and I say, I don't care. Move on. Yeah. Okay, anyway, net income could go in there. Year after year after year, you start with nothing in the company, you keep adding net income up. But you know what, when you start a new company, what do you usually have? Losses. They're debits, aren't they? The net losses will come in here, right? Year after year after year. In a new company, you'd have what's called a retained deficit. You just keep adding up the losses. Got it? Okay? See ya. I've already confused. That was enough of that. Okay, see ya. All right. Please check the last hour. Okay, so net losses just keep adding up and up, up and up and up and up. Right, guys? Okay? Oh, sure. Okay? And then, look, what else could happen? I start with nothing. I add all my net income for the life of the company. I take away all the net losses for the life of the company. But what else could happen? Think about if you put money in a savings account. Let's say you could actually earn 2% interest. We used to earn that kind of interest. We used to earn like 4 or 5 on a savings account. It's all inflation, so don't worry about it. Still, the real interest rate was nothing, right? And let's say you could on a savings account, 2%. You put $100 in a savings account. How much would you have in the savings account at the end of the year? 102. How much would you think you earned? 2. What if you took the 2 out? How much you'll have in the savings account? 100. How much do you think you earned? Oh, for God's sakes, really?
$2.
No, I think you earned 2 and you took 2 out. True? You still earned 2, you just took the 2 out. What if you put 100 in and you earn 2 and now there's 102 and you take the whole 102 out? You think you lost 100? No, you didn't. What happened? You earned 2 and you took 102 out. Come on, you guys, right? Okay, so in this company, what are we doing? In any company, we're earning income year after year after year. It's getting added to the retained earnings. Can the owners take some of it out if they want to? Yes. Does that make the company less profitable because they took some of the profit out? Of course not. They just took some of their wealth out. So what that's going to be is going to be called a dividend, right? And the dividends come out year after year after year of retained earnings. Got it? So what's left in retained earnings? You start with nothing. You add up all your net incomes year after year after year. You subtract any net losses in the years you have losses. Got the idea? Because they're debits. And you subtract all the dividends because they're debits too. And what will be left in retained earnings? It'll be the earnings you retained. Right? Retained means kept. That's because you're a freshman. I know you probably don't know that. Oh, come on. Laugh at something, guys. Okay, anyway. You know what retained means, I bet. Everybody good? Easy? Piece of cake. You know what's happening here is you guys are sitting there thinking, how can you make this hard? Well, let's try the next problem. I'll show you how it could maybe get a little bit hard, okay? Let's do something with this. Let's try that one, okay? Using the accounting equation, fill in the missing amounts. By the way, I am not going to go through how to do every quiz before you take a quiz. This is just remedial, development, you guys. You like that? Okay? Because I want to do a quiz really fast. So I'm going through this one with you before I give it to you. What am I going to do in the future? Give you one, you'll screw it up, and then what? I'll show you how to do it. It's far more fun for me if you haven't got it all right. If all of you get this right, it's going to be really annoying to you. Somehow I doubt that'll happen. Those of you who've been busting your ass will get it all right, though. There are going to be really high scores on this one. The only one that'll be really high scores on. Don't blow this one off, right? Get the high score on this one. They get harder and harder and harder, of course, because it's more fun for me, right? Yeah, torture you a little bit, or a lot. So how would you approach this problem? Take a look at that. Because you didn't bother to work it before class, before the review session even. Fill in the missing amounts. Assume it's the company's first year of operation. They're two different companies, huh? DEF company and MUNI company, Deaf and Muni, huh? So what do you think? Do those things look familiar to you? Revenues, liabilities, assets, income or loss, retained earnings, expenses, dividends? What does that look like to you guys? Balance sheet, accounts, income statement accounts, in total, a whole bunch of accounts added together probably, huh? Look just like that accounting equation stuff over there. Balance sheet, income statement. So anybody got an idea of how to approach this? You could, if you want, just stare at it a long time and try to work something out. I see lots of students do that. It's hilarious, right? And sit there and just think about something. I don't know what. Okay. Instead, what could you do? You guys have done algebra problems before, right? Do you sit and stare at them, or do you write down a formula and plug in what you know and solve what we don't know? We always write down what we know and solve what we don't know. Yes.
Well, once you have to find the total revenue and then the total expenses, so you would first take the liabilities and assets, find the difference between those, and then find the difference between the revenue to find the net income.
I would think so. Yeah. So what did he just describe? Exactly right. Okay. And you can do it without writing this down, of course. But you know what? You can't get it wrong if you write it down, although I did last hour, so yeah, managed it. Okay, but yeah, if you write it down, you probably won't get it wrong. And it's really quick to write it down. And then you don't have to try to hold it all in your head to do that. What do you think? The way I'd recommend doing it. What do we know? Assets is what? 150. Okay, let's write down everything we know. What else do we know?
Liability.
100. If you realize it right now, you can calculate equity if you feel like it, right? Doesn't matter. Okay, what's equity?
50.
It's got to be 50, right? You didn't ask for that, but boy, you need it, don't you? Right? Sure. Okay, what else do you know? Use all of them.
Revenue.
Revenue, how much is that? 230? Okay, I can't do expenses or net income because I have two unknowns, huh? So I got to figure out one of them first, obviously. Okay, what else do we got?
Dividends.
Oh, we have dividends. Where does that go? It's not expenses. The owner is taking out some of their own profit. Is not an expense. What is it? It's a direct reduction of retained earnings. I just told you guys that. Come on. How come you don't instantly know everything I told you? I look at you, that executive MBAs and such a K. You guys are intelligent people. What's going on? I just showed you how to do that and you can't do it. How could that possibly be? You have to pound on it a while, don't you? Think about it and think about it. Get it ingrained, okay? So you really know this stuff. Not see, you sort of do. So you really do. If you sort of do, I will sort of give you no points. What's going to sort of happen, right? If you know it really well, I'm going to give you a lot of points. Give you a huge difference. We'll have people at the end of the semester that have 40% of the points, and we'll have people that have 90 in the same class. The person with 90 doesn't know twice as much as the one that has 40. They know 10 times as much. And they're employable. One who has 40, give them their D and they can go on with their life. Hopefully they'll do something else seriously. All right? Don't be that person. Okay? Not just because you don't want to screw up your GPA. Don't be that person because you want to know what you're doing, right? This is about knowing what you're doing, not about getting grades. Grades just happen automatically. How many of you are worried about your grade in one of your classes or any of your classes or ever? Most of you, right? You're still young. You know what? If you only worry about learning stuff, you can quit worrying about grades. They will just happen. And you won't ever have to worry about how much money you make. And you won't have to worry whether or not you get promotions. They're going to throw them at you. Guaranteed. Guaranteed. They just will. You won't have to ask for that 20% or 50%. One year I got a 50% bonus when I was 24 years old. My salary was $20,000. They wrote me a check for 10. After 6 months, and they raised my salary to 30. And I still got bonuses. In the same year, 6 months to do the job. I thought it was gross if you paid to 20. I almost didn't take the job. Pissed me off. But it worked out okay that year. Yeah. And thereafter. I told the partner too that he almost didn't get me because he didn't pay me enough to start. He said, I didn't know you were not going to work that hard. Okay, anyway, so kind of glad I was. By the way, he made a lot of money because he paid me that money. Anyway, so do we know anything about retained earnings? You said dividend. How much was it?
$10.
Yeah, the dividend comes out of retained earnings. Does, right? Reduction of retained earnings. Okay, what else do we know? Oh, contributed capital is 35. What would be the journal entry for that contributed capital? Let's do a journal entry. Let's write down debits and credits. By the way, when you write a journal entry for crying out loud, put the account name on the left if it's a debit, and put it on the right if it's a credit so we can tell what it is. And you do not have to write debit or credit down next to it. You also don't have to write asset, liability, equity, revenue, expense down next to it because obviously we know what it is or we couldn't have made the journal entry. You like that? I know the author has you doing that. Don't do it. Okay? Don't do it. Just put down the account name. Put it on the left if it's a debit, put it on the right if it's a credit. And the dollar amount, what should you do to make sure I know it's a debit or a credit? Put the dollar amount on the left if it's a debit, put the dollar amount on the right if it's a credit. Show your debits first, then your credits. That's by convention. That's how we do it. Okay? Let's do this journal entry. This is, what, contributed capital? Let's say the contributed cash. What did the company get? $35 or 1,000 or a million or whatever it is of contributed capital because they had what they contributed. There's always an exchange. The company got something, gave up something. The company has more contributed capital, which means that ownership share went up, right? What else happened? The owner contributed cash, I just said. What's cash? Cash is retained earnings. If I go to the bank and I borrow $1 million, I will be $1 million richer because you guys think I have more retained earnings because I borrowed $1 million. Really? Are you kidding me? You don't have retained earnings by not earning. I get retained earnings by earning. Don't you guys? What's contributed capital? The owners contributed. I said they contributed cash. I made it cash. It's not written there, but I said it's cash. Let's say it's cash. Could be land, could be building, could be equipment, could be anything, right? They contribute cash. What does the company get if they contribute cash to the company? Land! Look at that, I still have a $10 bill. Sometimes I open this up and there's nothing, right? Lots of times. I'm not even annoyed. There are cash machines, and my wife still lets me carry these things around. They're kind of cool. Yeah. I've never paid for one of the bills since I met her either. Isn't that nice? I've also never gotten a paycheck since I met her. So, you know, yeah. All right. But sometimes this shows up in my wallet. Here, you can't have that. I take it. I want it back. Okay, that's all I have. Okay. Look, it's immaterial to me. We'll talk about what immaterial means too, but I don't know you yet. I don't want to imply I like you that well. There are all these people here. So, yeah, okay. Yeah, I can have it back. Now you don't want it, right? yeah. I don't want it. Okay, it's probably counterfeiting. Okay, so probably not real money. No, it's real. All right, you guys. If he was making a journal entry, would he debit land? Does that look like land?
No.
I think it looks like what? Cash. For crying out loud, what are you going to debit if I gave that to you? No, if you were going to keep it.
Oh.
Of what? Yes, you debit an asset named cash. What are you guys doing? You're trying to make this hard. Thank you. Okay? Trying to make this hard. If I was investing in him, his business, he would debit cash and credit something named an equity account. Only if he was going to pay me back and be notes payable. I'm investing in it. What is it? Did you guys read this stuff? Yes, you did. How many have not read the first 3 chapters now? Anybody? You've read them, haven't you? And I think you haven't either. Because you don't know what's in them. Oh. You mean you opened the book and you read all the words? You know what? I bet my 7-year-old grandson could read this book. He can sound out words. he wouldn't know what they meant, but he could sound them out. And he can read numbers. Is that what you did? You sounded out the words and you read them? You read the numbers and you don't know what the hell you read? You don't know what equity is, do you? What's the deal? I just said the owners contributed $35,000 or $35 million or whatever it is. What did the company get? I said it was cash. They got cash. What would you do to cash? It's an asset. What would you do to it? Debit it. Why would you think they got land if they got cash? They didn't get equipment either. They didn't get salary expense either. They didn't earn any revenue either. They don't have a liability either. They're not going to pay it back. It's an investment. Okay, what did the company get? Cash. Right on the left-hand side, cash. And I thought you guys were going to be the strong class. The other one had it like that. Or at least the 3 or 4 people that had the class last semester and are taking it again, they all had it. Yeah, they got it because they're taking it seriously. Debit cash, you guys aren't yet, but you will, right? Credit what? Equity, yeah, and we need a name of an equity account. We can call it contributed capital for now. By the way, for me, you can abbreviate like that. When you get Alan Deck's classes later, those of you who do 212, and Richard Schrader's 313, ask them before you abbreviate. With me, though, don't do this. We'll have inventory and investments. Don't use INV for the abbreviation for both of them and then tell me that it's right. Okay, you got to do a little better than that, right? Differentiate at least, but contributed capital is good enough. Later, it's going to be common stock or preferred stock, which are types of contributed capital. What's contributed capital? A what? Contributed capital, what is it? It's equity. What do we do with the equity if the owners invested more in the business? Probably increase it. So I'm debiting assets, increasing, and I'm crediting contributed capital, increasing it. What's wrong with you people? Doesn't that look easy? Yes. Why aren't you thinking this way yet? Okay, now I have spent all the time so far, I already said this, I've spent all the time so far getting you to look at this model and think about it, haven't I? I haven't shown you specifically how to do any journal entries. That's because I don't need to. All you have to do is read what it says and write it down. Either you got an asset, maybe you gave up an asset, maybe you increased the liability, maybe you reduced one, maybe you increased equity, maybe you reduced it, maybe you earned some revenue, maybe you recorded too much and you have to take some out, maybe you incurred an expense, or maybe you recorded too much and you have to take some out. That's all there is. Okay, you give me a transaction where a company can get an asset and give up an asset. Buy an asset. How about UPS buys trucks? What do you suppose they debit when they get a truck that costs $100,000? How about an asset named trucks or delivery equipment or something, right? Equipment, right? They're going to debit equipment, increasing it. What if they pay cash for it? They don't. But what if they paid cash for it? Debit? So you're going to debit trucks and debit cash too? That'll work out really good. You're out of balance now. What do you want to do? Okay, so debit trucks and credit cash. Yeah, that's exchanging assets. What if they promise to pay later, which is more likely? What if they sign a contract payable for the whole thing? What would they do? Debit trucks and credit what? Notes payable, credit, increasing the liability. What if I contribute the truck to a business and they give me stock for it? Capital stock, ownership, contributed capital. What will I do in the business? Did I still get a truck? Yes, I would debit trucks, wouldn't I? And what would I credit? Common stock, contributed capital account. You mean I can exchange assets for assets, liabilities for liabilities, equity for equity? You can even exchange revenue for revenue and expense for expense if you want. You can exchange assets for liabilities, assets for equity, assets for revenue, assets for expense, liabilities for all of them, equity for all. You got the drift? All you got to do is figure out what you got, what you gave up, apply the rules, record them. And do you have to memorize the rules? What for? What do you have to memorize? Debit means left, and assets on the left. Boom, done. The rest is common sense. I got it made. So I don't need to show you how to record all these journal entries because then you'll memorize the journal entries. That's the danger of the author showing you something you can. Might be better if we just laid out the model and said, figure it out. And that's pretty much what I've done for you, huh? Let yourself figure it out. You're going to use this. So when I said they contributed cash, I added that, right? What is it? You have more of an asset, debit cash. And you have more equity, contributed capital. Let's do the dividend. Write the journal entry for that dividend, you guys. Where did I put the dividend? In retained earnings, didn't I? Guess what you debit? Here, see that? What do you debit when you do a dividend? I am directly reducing retained earnings. It's not an expense of the business, right? It's not an expense I incurred to get my revenues. It's just the owners took some of the profit out, right? So what would they debit? What do they have less of? Retained earnings. Sure, debit it. That's how the tin gets there, everybody, right? You debit it. What would you credit? Let's assume they paid the dividend with cash. I gave them cash. How about cash? If I'm going to pay them later, I'd call it dividends what? I'd be a liability. I'd owe the shareholders. I'd debit retainers, and I'd credit a liability named what? Dividends. Put the word payable on it, you got a liability. Dividends payable. Then later when I pay it, what would I do? It'd look like this. Okay? I debit retained earnings for the 10. I credit dividends payable because it's called declare it. We'll get that later. Okay? It's understanding business. So we promised the shareholders a dividend, right? We now owe it to them. Debit retained earnings, credit dividends payable. Right? What would I do when I pay it? What do you think you're going to pay it with? Cash, which is a asset. You have more or less if you pay it out. Less, what do you do to it? It's an asset, you credit it. Sure you do. Let yourself think. What don't you have anymore? Dividends payable gone. How do you reduce the liability? All of them. Debit. Let yourself get your head around this stuff. That's what makes college so hard. I'm not going to give you a little piece at a time. I'll give you a picture, and you need to understand. How does it work? How does it all interrelate? And then the next class, how does it relate to that? And the next thing you learn, how does it relate to that? How does it all fit? You had philosophy, yeah? Anybody doing philosophy now? Holy cow. Yeah, that's what it's all about. It's not recite what some philosopher said. Who cares? Right? It's what they mean. I don't know. They probably didn't know. Your professor probably doesn't know. But you're going to work on it. Right? Okay? This is simple, this stuff. Right? You can figure it out. Okay. All right, guys. So finish this problem for me. What do you think? What can we do now? What's the beginning contributed capital? Nothing. What do we put into contributed capital? 35. What do you suppose the balance is in contributed capital? 35. Okay. What else do you know? What's the beginning balance of retained earnings? 0. We had the dividends, right? We got the dividend in there. Can you solve anything else? No, no. Can't do both of those at once, but I can do something. What can I do? Contributed capital plus what equals total equity? Yeah, contributed capital plus retained earnings. What's contributed capital? 35. What's total equity? What number do you have to add to 35 to get 50? 15. This is a joke. It's so easy to get over this. Huh. So I got that one. Now what? Let's see. Retained earnings started at nothing. We took 10 out for the dividend, and somehow we have 15 left. What must we have done? I bet we earned something. How much? 5? 0 plus 5 less 10 is positive 15. Really? Remember, you're taking the difference between debits and credits. What's my debit got to be, you guys? 0 plus some number less 10 is 15. What? 25. You guys have had algebra. Funny guy. Okay. There's 25. What's that? Retained earnings goes up when you do what? When does your wealth go up? When somebody contributes to you or you earn. What are they earning? Net income. Oh man, you guys got some work to do. Okay, what's net income? It's got to be that number, right? It's 25. Okay. Now, revenues, debit or credit? It's a credit. Net income, debit or credit? It's go up. Net income, credit. It's not good or bad. It's left or right, isn't it? Right's good. Credits are good for net income or for retained earnings. Got it? Okay, so what's the expense? Got it. Okay, do the other one. Give you 2 minutes. Right? Do the other one. Make it work. Let's show the yellow face. Fine. $214, right, guys? Is that where we're going? Yes? Yes, sir. Okay, sir. The way you make holding that is with people like me. If you don't say it, you know, you push people about. Say the thing you say, just think asshole. Yeah, no. Military and good training from your parents, all that stuff. So, yeah. I want my grandkids calling people ma'am and sir until they shouldn't be. Right? You go to work. Okay, no more of that. Unless you're in the military. Of course, there's a way of saying sir, ma'am, where it conveys that you hate their guts, but you still say it. So you guys got it? Yeah? It's not a big deal. This can be really fast. It'll give you really easy. Oh, by the way, will you have memorized how to do this problem, or you know what you're doing? That's the rub, isn't it? I promise I'll give you stuff where I won't have explained it and you'll have to figure it out. It's always the same stuff, though. Okay? So once you know what you're doing, you know what you're doing. Let's write down everything we know and solve for it, okay? And then we'll get out of here. The next class can get in. I don't get in trouble. With another professor. Okay, so what do we do?
You know, liabilities,
How much?
180.
Okay, what else do we know?
Returned earnings,
How much?
100.
Okay, retained earnings. And in the future, we'll have beginning retained earnings, of course, by the time we do the first exam. It's how much at the end? 100? Okay, good. Okay, then what?
Expenses is 180.
Okay, what else do we know?
No dividends are 40.
Okay. All right, what can you solve for? I can't get that one or that one. I can't get that one or that one, but I think I can get this one here. What's net income, guys? It's not 60. 0 plus 60 less 40 is 100. That's what you're telling me. Debits, credits. Add it to credits and subtract your debits in this case, right? 0 plus some number less 40 is 100. What is it? It's 140. Be careful. 140. Let yourself think. Got it? You won't do that again. Okay? I bet you're not the only one. Okay? 140. So net income's 140, isn't it? All right, gang. What's revenue? 320. Okay? Now what? What's contributed capital? 35. What can I do? Because it started at nothing. And we know we put 35 in. What do we have for total equity? 135. What's assets? 350. Is this a joke or what? Work on it, work on it, work on it. I'll see some of you down in 214 now, some later, and some we'll see you hopefully on the video. If it's an old one, watch it anyway. It's just me talking about basically the same thing, okay?